Here are some common mistakes that a lot of people make that you need to avoid. The first mistake is not preparing for retirement by not having a Roth IRA. The second big mistake, you have a Roth IRA contributing to it regularly, but you haven't invested the money that you have been contributing. Don't just let your money sit there. Make your money work for you by investing it. Hi everyone, it's the Portfolio Plug. In this video, I'm going to teach you what a Roth IRA is, why you need one, and what stocks you should be investing in with your Roth IRA. If you don't have a Roth IRA, right now is the perfect time to open one so you can start investing towards your retirement. Let me explain what a Roth IRA is. A Roth IRA is an individual account that's used to save for retirement that offers tax-free growth and tax-free withdrawals after the age of 59 and a half for retirement. In other words, you can put money that you've already paid taxes on in your account. It will then grow, and when you come withdraw that money once you retire, you won't have to pay any further taxes on it. The maximum annual contributions for 2022 that you can put in your account is $6,000. And if you are 50 years and older, you can contribute up to $7,000. Something to keep in mind, if you are under the age of 59 and a half and you withdraw, you are subject to a tax penalty. However, if you are 59 and a half and older, and after you have owned the account for 5 years, you can withdraw your contributions without having to pay state or federal income tax. Also, if you buy a house, pay for college, or need your Roth funds for birth or the adoption of a child, you can withdraw that money without having to pay taxes on it. Once you put your funds in your Roth IRA, you can use that money to invest in stocks, ETFs, bonds, mutual funds, and money market funds. And right now is the perfect time to start investing. People are panicking. There is extreme fear in the market because people are afraid of the possibility of this recession. For example, this past week, the CEO of JP Morgan Chase Bank, Jamie Dimon, gave a major warning saying that the US and the global economy are going to be in a recession in the next 6 months. That is a huge deal. But personally, I think we are already in a recession because of the 2 negative GDP quarters and ever since the Federal Reserve started quantitative tightening back in June. Not to mention, aside from Jamie Dimon, Chase Bank CEO, giving a heads up of a global recession in the next 6 months, in that same week, this past week, CPI data came out and it was worse than expected. CPI stands for Consumer Price Index, and it is used to measure the change in price of goods and services purchased by you, me, us, the consumers. In other words, it is used to measure inflation. The results show that inflation rose by 8.2% from last year to this year, and it also showed that it rose by 0.4% in September from August. And when you look at the core CPI, that's when you remove food and energy from the report in order to get a true gauge of the underlying trend of inflation. It showed that inflation rose by 6.6% from last year to this year, and it rose by 0.6% in September from the prior month. That is the highest that it's been since 1982, 40 years ago. That's huge because it shows that the Federal Reserve are failing. They have been increasing interest rates all year long to bring down inflation, and inflation is continuing to rise. Therefore, they have to be even more aggressive with interest rate hikes. And the more interest rate hikes we get, the deeper of a recession we fall into. As a result, these are creating extreme fear in the stock market right now. People are panicking and they're selling their stocks. That's why now is the perfect time to start investing for your retirement with your Roth IRA. You want to buy when stocks are at a discount, when there's extreme fear in the market. And right now there's extreme fear. It's the perfect time to start investing for your retirement. And remember, the stock market has recovered from every recession. And the deeper the recession, the bigger the returns. Here are 3 stocks you should consider investing in with your Roth IRA. Before I tell you what the 3 stocks are, if you find this video to be helpful, I would appreciate it if you leave a thumbs up and subscribe. The first stock to invest in with your Roth IRA is SPLG. SPLG is the Spdr portfolio S&P 500 ETF trust. It is a low-cost option for owning the S&P 500. It has an annual return of 12% and costs less than $50 to own 1 share. This will give you diversification by giving you exposure to every sector in the stock market. The second stock is SPYG, SPYG. It is the Spdr portfolio S&P 500 growth ETF. It is a large cap growth fund that holds the top 300 of the largest growth stocks in the S&P 500. Some of its top holdings are Apple, Microsoft, Amazon, Eli Lilly, Home Depot, Tesla, and more. And it is another low-cost option. It costs $50 to $55 to own 1 share, and the annual return on average is 14%. The third stock is XLV. It is the Healthcare Select Sector SPDR Fund ETF. This ETF provides exposure to companies that offer healthcare equipment, supplies, and services, as well as companies that operate within the biotechnology and pharmaceutical industries. It is also another low-cost option. For 1 share, it costs around $120 to $130. The top 3 holdings are United Health Group, Johnson & Johnson, and Pfizer, and it has an annual return on average of 14%. If you find this video to be helpful, leave a thumbs up and subscribe, share it with a friend, and if you have any thoughts or questions, leave it in the comments. Thank you for watching, and I'll see you in the next video. If you find this video to be helpful, leave a thumbs up, subscribe, and share with a friend. And if you have any questions or thoughts, leave it in the comments.